Hi, my name's Libby and you're listening to The Property Pod. Today we are joined by Francis from Potter's Estate Agents in Woodbridge and also to my right, Stuart from our conveyancing team at Attwells. So thank you so much for joining us today. It's really great to have you in the studio. Could you tell us a bit about your company to start off with?
Yeah, well, I'm actually the father-in-law. The company was founded by my son-in-law, Bradley Potter, 18 months ago. Bradley had managed a national firm of estate agents and he became a bit disillusioned with their sort of behaviours. He thought he could offer better value for money, a higher level of customer service, give clients 15, 20 minutes to kind of consider after we've done a 15-minute viewing, where they can wander around, become a bit familiar with the property. He also thought it was important to have good follow-up service. See, selling the house and buying the house is the start of the transaction, and then that's where you come in as conveyancers and we come in as good communicators. That's the important thing for us.
Okay. And what do you think people should first consider when they're buying their sort of additional second home?
Well, that's where the list is quite extensive of what people should consider. Primarily, it's whether you're actually going to use the property or not and whether you're going to get value for money. There are three main things that people should consider. The first one is entry charges. Entry charges, the big one is stamp duty on second homes because it starts at zero. It doesn't start at 125 or 250,000 and it carries a 3% surcharge over the normal stamp duty levels. You'll also have other associated cost, legal costs, etc. Then there's the ongoing charges. Council tax, insurance premiums. These are likely to be higher because the property will be unoccupied. You've got to bear in mind utility bills, and normally the borrowing rates on a second property are higher than your principal and primary property. So you'll have a higher rate of interest. And then the last thing is exit charges. Because it's not your principal and primary residence, it's treated as an investment. And what that means is it's taxed like other investments with capital gains tax. This could potentially be 18% on disposal if you're a basic rate taxpayer and 28% capital gains tax if you're a higher rate taxpayer.
Okay, great. And what factors do you think could positively or negatively affect a second-time buyer's mortgage eligibility?
Okay, so for lending advice, you don't need an estate agent. You're going to need a qualified independent financial advisor. However, in general terms, loan to value and the level of deposit you've got are crucial. You also need to consider whether you're planning to rent it and your own financial position. If you're planning to rent it, then the income that you derive from the property is going to be taxed at your highest marginal rate. So although you might think, well, actually, I've got a yield of 5%, which is fair enough, you might only be getting 3% after you've paid tax, and you've got your expenses on that as well.
Okay, great. And can a second-time buyer still use a deposit, and how can they prove where the funds have come from?
Okay, so both estate agents now and solicitors are required to undertake due diligence. They need to find out where the money comes from, and that's only right. This is known as source of funds, so we would ask to see bank statements, building society books, maybe wage slips, an offer in principle if you're borrowing money. We'd also need proof of your identity. So we'd like to see your passport. If you haven't got a passport because you haven't been travelling with COVID over the last 18 months, then a driving licence and a utility bill or a council tax bill.
Okay, the only thing I have to add to that really is if someone was receiving funds by way of a gift from a third party, 1 in 4 transactions nowadays are funded by gifted funds. You also need ID checks on the person gifting the funds, the documents, statements, etc. from the person gifting, and also their ID check as well.
Okay, great. And what do you think second-time buyers should look for when they're viewing a house, and sort of other tips that you have for that?
Okay, so firstly I would say spend your money slowly and wisely. Ask yourself, are you going to live there, and whether the numbers actually add up. It's all too easy romancing this wonderful English country cottage on a warm summer's day in July, but it's very different attending to a leaky tap on a wet Wednesday in January. And if you go to the more remote parts of Suffolk, then snow and now flooding with the environmental changes can be a real problem. There's nothing worse than finding your own property is cut off. You've got the stress of a leaking pipe and then charging into it. So consider the decision wisely. It's not a big rush. Take your time.
Okay, great. And do second-time buyers have to pay stamp duty, and how is that sort of calculated?
That's a brilliant question.
Okay,
And that's that's the one that most people mistake. The reality is that stamp duty is paid on the purchase of a second home, and it's quite punitive. So this time it's 3% from 0 to 125,000. It's 5% from 125,000 to 250, 8%, which is substantial, from 250 up to 925,000, 13% from 925,000 up to 1.5 million. And then over 1.5 million, the tax rate is 15%.
Oh, wow. Okay. Oh, that's very interesting. And how long does it take to buy a house as a second-time buyer?
Okay. Well, that's variable. There's a number of different factors in there.
It's quite a broad question.
Yeah. Factors include. Factors include: is the property empty? Okay. How accessible are your funds to that? Is there any ongoing purchase? And the other thing I would say is pick a good firm of conveyancers, because if you pick a one-man band or you go to an internet company, you might save £100 to start with, but overall it's going to cost you substantially more. There's value in choosing an established firm.
Yeah, definitely. I think sometimes people think, it's going to be, easier and quicker to just do something online or, just get something just quickly. But actually, I feel like you're actually compromising the quality when you're doing that. People don't think about it sometimes. I wouldn't think about that before I came to Attwells, and then you don't realise how much is involved. Yeah.
The reality is, and it's an old phrase that I learned sort of in my former profession, is that good things are seldom cheap, and cheap things are seldom good. And our experience of online conveyancers is that it takes forever to communicate with them. So they're very good at packaging the services to start with, but the actual delivery and the substance behind it, frankly, is not good. Better off choosing a local firm.
Yeah, I think the key to it is to with a local firm, you will speak to the person that's giving the advice. You will speak to your solicitor. An online firm, you tend to speak to someone who answers the phone and is a sort of messenger service between the client and the solicitor, and days and weeks can be lost. And as you say, if you're trying to save £100, £150, but you've lost a month, 2 months in your transaction time, one, that money's already been swallowed up, and two, there's sometimes with internet firms, what they actually quote you at the start isn't always what you pay. And
seen that.
Finally, I suppose a house is your biggest investment you'll ever make. So don't skimp on the advice you're receiving is sort of my top tip.
Couldn't agree more with that. Couldn't agree more. The evidence bears it out.
Yeah, indeed.
And what extra costs do you think are involved in moving house for the second time?
Okay, so that was also a very good question. If you purchase a second home, probably the best thing to do is for us to look at an actual example. So picking on an example, if you are a higher rate taxpayer, because it makes the maths simple, and you have already used your capital gains tax exemption, your personal allowances, then you're going to pay stamp duty on entrance. So let's say a £500,000, that's 3% on the first 125, that's 3,750. It's 5% on the 125 to the 250, that's another 7,500. And then on the remaining, it's 8% from 250 to 500,000. That's 20,000 in stamp duty. So buying a second property after the 30th of September, when the stamp duty changes come back to normal, is going to cost you £31,250 250 in stamp duty, and you've got other legal costs.
Yeah.
If you extenuate this, and let's say the property increases by 50% over 10 years, which is a reasonable assumption, that property is now worth 750,000. That means that your gain is 250,000. And if you are a higher rate taxpayer and you've used your sort of personal allowance, that is another 70,000. So you've got the entry tax, which is 31,250, and you've now got your exit tax, which is 70,000. The tax in total on this £500,000 transaction actually works out at 101,250. And if you rent the property, you'll also pay tax on the income at your highest marginal rate. That's a lot of money, and you need to be going in with your eyes open that that is what you face. Tax on entry, tax on the income while you've got it, and then capital gains tax on exit.
Okay, great. And do you have any extra tips for second-time buyers?
Yeah, I would say think logically, not emotionally.
Yeah.
And it's very, very hard to do. It was once described to me that the logical bit is like the tip of the iceberg. It's the justification you use for buying a property. But that 90% under the surface is your heart's coming in.
Yeah.
We spoke about it a little this morning. You can fall in love with a property, and it's rather like when you fall in love for the first time, your heart takes over and your brain tunes out. Don't do that with a property. Get the piece of paper out, write the numbers, seek proper financial advice, proper legal advice, and go to an estate agent that will give you the time. It is not a sprint, it's a marathon. And once you've purchased it, you cannot go back. You cannot sort of put in 14 days notice or complain about it. You've got that property.
You're in and the money's been spent.
So finally, I would say spend your money slowly, carefully, do the calculations, and be aware that only fools rush in where angels fear to tread.
Okay, that's great. Thank you so much for coming on today. It's been really great. And thank you for joining us as well at home. And if you did enjoy this episode, please don't forget to like, share and subscribe, and we'll see you next week.